PropChat, ultimate insights of trading with Sabio.
Hey everybody, and welcome back to PropChat. This episode of our podcast is truly special. Today's guest is a man who has seen the game evolve, crash, rebuild, and evolve again. And today he's here to share what he wishes he'd known when he just started, and what decades of trading and coaching have taught him about the markets. He's a former Royal Air Force officer turned professional trader, fund manager, and performance coach with over 30 years of experience in high-stakes environments. He started trading during the legendary dotcom boom, worked in the city, and has since coached traders at every level. He's the founder of Trading Beliefs, a trader development practice that helps people build behavioral edge. He's also a regular speaker at the London Trader Show, International Traders Expo, and has been featured in Investing.com, Core Finance, and Traders Magazine. Ladies and gentlemen, please welcome Paul Wallace. Hello, sir. First of all, I'd like to thank you for accepting our invitation and becoming a guest here on our podcast. It's so great to have you here, sir.
It's my pleasure to be here, Evan. I'm looking forward to it. Should be a good chat.
Great, thank you. That's an honor. So let's kick things off with a fun little game, which I call the Butterfly Roulette. So imagine you're in one of those, time travel movies like The Butterfly Effect, and I'll just drop you into different moments of your trading journey. So imagine you can walk right up to your younger self and say only one thing, a piece of advice, a warning, or a secret you wish you'd known back then. So if you're ready to time travel, we can start.
Yeah, go on. Let's time travel. Let's time travel. All right.
Let's begin with situation number one. Your very first trade.
Okay, so my first trade as what I would define as a trader would have been, it was two trades. My first two live trades were I was long euro dollar, long pound dollar. I can remember it to this day. They were my first live trades as what I would call as my trade. I'd done stuff before, but as a operative, I generated 174 pips on those my first two live trades. And in those days, there was no kind of mini accounts. There was no micro accounts. You were in a full standard lot and such. So I thought that, I thought this was fantastic. This was amazing. I thought this is the way it is. It was back in those days. There were early morning breakouts for me trading the kind of London session. Early morning breakouts worked fantastically well back then. Not so much now, but it was a glorious. Yeah, it was a glorious morning. I enjoyed it. I wish every morning was like that.
Mm-hmm. So, would you say anything to you, like any advice to your younger self, if you could, approach yourself at that moment?
On that day, I'd probably tell myself to enjoy it. Don't get cocky. Make sure you keep managing risk, and make sure that you don't get ahead of yourself. All right, stay centered, stay grounded. You're only as good as your last trade. That's what I'd be telling young Paul.
All right, another situation. Your first big win.
My first big win was it was kind of during the kind of dot-com boom there. When, even though I did well, I wouldn't consider myself a trader in that period. I was working in the city. I was working in the kind of dot-com industry for a year or two, and I was just in the right place at the right time, and I got lucky. So I consider that period as me being a lucky punter, a lucky gambler rather than a trader. But I invested into a couple of the early dot-com stocks, and they just went really, really well. But as I said, I was just lucky. All right, I was lucky. It was just right place, right time, right business, and I'd swallowed the whole Cisco story about the internet economy, and it went well. It went well. You didn't have to be good back then. You would just have to be lucky, and I was lucky. Lucky. So yeah, that would be that.
All right. The next situation, your first painful loss.
Well, do you know what? Actually, in terms of painful loss, kind of one of the funds I worked for, we had a bad afternoon, and the reason it was a bad afternoon was we traded a new strategy in line with what we had developed as the strategy, and it was a mean reversion strategy working on the Japanese yen, which had done really well over the summer. But that was the day that the yen broke out and went into a trend, and we traded the strategy, or we traded the plan accurate, as in as the plan had been laid down for us. But what it showed was that there was gaps in that plan in terms of what looked like it worked well in back testing and what looked like it worked well in in small accounts on real markets. Actually, there was gaps in that plan. You could have driven a tank through, and and that was basically, that was painful. I think maybe lost about. I mean, ultimately, I think it was about 4%. So it wasn't. It wasn't. I've never blown up an account or anything. But 4% based upon the fact that we were so strong and tight at managing risk was kind of a painful loss. But we learned from it. All right, we learned from it.
But would you give any advice to your younger self at the moment of that loss?
Just that. It's that old military adage of a plan is only good until first contact with the enemy. And what I mean by that is that every plan looks great on paper. Every plan is easy to look at, but actually, once you employ it at size in a market, that is when you truly find out whether that plan really works, and that's fine. All right, that's fine. Hence why you still manage risk. That basically it is important to follow that plan and to stay calm, stay objective, and then in the debrief afterwards, make sure you get all the data. Make sure I do all the debrief, which is actually what I did, and then use the pain of that loss as fuel for your next evolution as a trader. It's losses are supposed to steer you, not sink you, and that's all it was. It was a loss that steered me personally and professionally, in terms of it. So it's just a bad day at the office. That's all it was. That's all it was.
All right. What about your longest losing streak? Do you remember it?
Yeah, in fact, it was one I kind of created myself. It was at the start of early on in my trading career. I read Mark Douglas's books, okay, Disciplined Trader and Trading in the Zone. And for anyone who's read it, I suggest you, if you haven't read it, read it. And then once you've read it, go back to the start, read it again. And then again, I think I've read it about 10 times. But there's a challenge in there that he challenges you to do a simple discipline exercise. And it's now what I get traders to do, a simple discipline exercise. It's a simple breakout trade. And he was talking about, and I see it myself, is that, most people, they can't really follow a plan. If they have a few losses after about 6 or 7 trades, they can't follow it. And his challenge or his exercise or his task for you was to get 20 of them done. And actually what I did was I challenged myself to do 250 of them. And it was just early morning breakouts at a time when, in hindsight, looking back on that period in the market, early morning breakouts in FX markets, those markets were range bound anyway, so they were always going to struggle. But it was a long losing streak of that. But it wasn't about the losing. It was embedding Mark Douglas's ideas about how you don't need to know what's going to happen next to put a trade on. You don't need to it's not about being right. Your job is to put the trade on, all right? And so what it did do was, God, it was painful. It was painful, but it broke in me like you would break a horse, trading a horse. It would break in me that need to know what's going to happen next, to actually just see the trade, take the trade, do your job. Your job as a trader is to plan the trade the plan, manage the risk. The market defines when and if you'll get paid. So So, if I was talking back to that, Paul, I'd say, yeah, this is painful, but it is short-term pain for longer-term gain as you break you need to be right and build and embed the right habits to be an effective and consistent trader.
Some lessons only life can teach, but luckily, not all of them. At Sabio Academy, real traders teach you the shortcuts they wish they'd known earlier. It's the ultimate prep for your next prop assessment and real-world trading. So proceed to the Academy, choose courses that you like, and proficiency is inevitable. All right. What about the situation when you nearly quit? Do you remember a time when you nearly quit?
I can honestly say, with my hand on my heart, I've never come to a point of quitting the trading. There have been challenges. There have been frustrating periods. There have been days, weeks, even months that have tested me and challenged me and frustrated me. But I can honestly say, when I look back, I've never ever thought that oh yeah, I've had enough of this, or I want to quit this, or I can't do this anymore. If anything, when I've had those testing times, it's more about me being right. You need to get a grip of this. You need to sort your life out. You need to improve. You need to step up and improve your skills across the board as a trader. This is challenging you to be the best version of yourself as a trader. So yeah, I've had testing times, and there have been times where I've been fed up with trading. But I can honestly hand on my heart say I've never once thought, I quit. I've had enough. That's not me. It's not me.
All right. What about a time when you trusted your gut and it really worked?
All right. Okay. So this is back to after dotcom days, and this is a little bit of a story, but it is about testing my gut. So I was working in London, working in the city, and what I found was that when I was walking around London in the city, all of the empty shops were being reopened as coffee shops, and I thought there's something here. There's a new trend here. I should buy into companies that are that are doing this, that setting up these coffee shops. And so I went back to my desk. I had my desk in the office. I can see it now and stuff. I had like charts and prospectuses from these coffee shop companies, okay, that were opening up and rolling out. And one of my bosses at the time saw the documents on my desk and said, what's this about? And I explained, I said, I think there's a start of a trend here, coffee shops, everybody's going to coffee shops. And he was like, you're talking rubbish, Paul. This is London, this is England. We drink tea. Nobody's gonna drink coffee here. Nobody's interested in coffee. And I said, right. I said, okay. I said, well, have you done any trading and investing yourself? And he said, oh yeah, I did lots of trading, investing in joined the dotcom. And then, oh right, how'd you get on? He said, I lost everything. I lost everything. And I said, right. I remember thinking to myself, here's a guy who lost everything, who's telling me not to basically invest in this idea. I'm actually going to do the opposite. And so I was going to buy £1,000 worth of shares in Cafe Nero. They were 25p. And instead, I bought £2,000 worth of shares. I doubled my position, bought £2,000 of shares at 25p. And then over the next 2.5 years, they went up tenfold to £2.50. So, and that's when I stepped out and stuff. And I was quite pleased with myself. And then in the years ever since then, for a few years afterwards, whenever I would meet Brian for a coffee, I'd always insist on us meeting in Cafe Nero, and I'd always happily buy the coffee and cake just as a little reminder. Thank you, thank you. So yeah, I trusted my gut and it worked. So there you go.
All right. What about a time you compared yourself to other traders?
Okay. Yeah, this would have been many years ago. I was, I was in London, living in a flat on my own, trading away and doing well. But I realised that, I lived in a city of 10 million people, and sometimes I would go 2 or 3 days without seeing another human being, and I realized that's not smart. That's not winning. That's not clever. And in the weird way the universe works, about a couple of days later, I got a call from we won't mention them, but a major trading education firm had been told about me and wanted me to basically to effectively go and be one of their coaches, on their trading floor. And I thought to myself, I thought, well, this must be great. If I'm going to work on a trading floor, these guys must be great. Be smart, Paul. You could go there and learn from all these other traders and get better as a trader. And develop yourself. And it just so happened my first day there was like a big traders day on the trading floor, and they had like traders and coaches there and stuff. And I thought I'd walk in there and I thought I'd be at the bottom of the pile and need to strive to get better. And within about 2-3 hours, I realized, Paul, that you're the best guy in the room. This is not the place for you. This is, these guys, they're all good guys. I'm still in contact with some of them, but it just showed me that in the kind of elements of the education game, it was about, in the land of the blind, the one-eyed man is king and stuff. And so I didn't stay long at that particular firm because I realized I wanted to be in a room where I was the worst trader and I had to work hard to improve. And actually they were coming to me and asking me how to trade. And I realized this is not me. So, the message to young Paul, to myself of that is that, just trust in yourself, right? You need that yardstick, you need that kind of perspective, but ultimately, it's your own journey. You just got to work hard on it, Paul. Just got to always work hard. That's it.
That's fair. All right, and the final situation: your first burnout.
First burnout. So that would have come from working at the first fund. So I was working for myself. That education firm got me an interview at a firm, a fund, and I ended up working there as a intraday FX trader. And of course, I thought, this is it. This is where I wanted to be. All right, I kind of made it, and I was working hard to basically to make it a success, to win. And so I would start trading on. Start trading on a Sunday evening, because back in those days there would be gaps on the FX market on a Sunday night, which were tradable events. And then I'd be at my desk by 6:30 in the morning, and sometimes still there at 10:30 at night. And what I found was that when I was doing all my data and going through my trading data, I realized like 50% of my losing trades were happening on Fridays. And what I realized was that actually just by Friday, I was just burnt out. I was just done in. I was just tired. I was just mentally and emotionally burned from trading. So I actually went to the board of the fund and basically showed them my data, and then basically I stopped trading on a Friday, and then I stopped even going to the office on a Friday because I didn't want to be on the trading floor and that sort of temptation, when moves are happening. And so I still kind of carry that through until today. A bit of, if I've had a busy week, I realise that you sit there, you think you sit there at your screen just clicking your mouse and it's fine, but actually it does take its toll on you. And so so that was I'd say that was my kind of first burnout. And then it physically manifested itself about 5 months later, but that might be a different story for a different day.
Mm-hmm. And what advice would you give your younger self at that situation?
That it's okay to want it. If anything, it's actually the message I give to young self is the same message I give to people now when they ask about going to work as a trader for a fund, and it is, be careful what you wish for. All right, be careful what you wish for, because be careful what you wish for. You have to learn to manage yourself. All right, and because if you're not, well then you'll either burn out or you just won't be able to operate effectively as a trader. So be careful what you wish for.
That's wise. All right, sir. That was great. That was very informative, very thought-provoking. Thank you. Now let's move on to the main thing, to the main interview.
Yeah.
You, sir, were a Royal Air Force officer before becoming a trader, a job built on performing under extreme pressure. So, how much of that experience really shaped the way that you handle pressure in trading? I don't know, maybe any specific mental tricks or, I don't know, life hacks that you still use from those days?
Sure. So actually, there is a long story, but there's a huge amount of correlation between traders and battle managers, which is the job I did in the Air Force. Huge amount of correlation of skill sets. I was I was under a kind of like a what they call a short contract as a junior officer, 6 years, and in that time, what happened was there was some banks in London, this is in the 90s, who were looking to poach guys doing my job. They were looking to take on air traffic controllers and battle managers, fighter controllers, as traders on the bank floor, because there's an awful lot of similar skill sets. You have to be calm yet decisive. You've got to be comfortable in uncertainty, able to make decisions, able to recognize when you've made a wrong decision and correct it really, really quickly. Just comfortable with the stress of it all, comfortable operating fog. There's a whole host of similar skill sets. It excited me, and it wanted, it was kind of I realized that's the path I wanted to be in. The thing I'd say about there's a few things I'd say about veterans that they can take across into trading and that anybody can learn from. You become very good at managing risk, having an awareness of risk and understanding your level of comfort with risk. We all sit on a spectrum of risk, as in some people are very accepting of it, some people are very adverse to it, and you need to know where you sit, and then you need to trade in line with that. If you're a very nervous, risk-averse person, trying to scalp the American market to the open, is just not going to be your way of doing it. All right, it's not going to be way of it. You have to know who you are and then employ that. So definitely that kind of risk, that risk management, basically recognize that, that basically you have to have a plan. You have to sort of follow through on that plan. We also have to realize when that plan goes to hell, which it does, as Mark Douglas says, once a trade is triggered, anything can happen. You have to be able to operate comfortably in that environment. And people would know that, like, skill is a drill. Veterans know that skill is a drill, and it's the same with trading. Skill is a drill. You have to practice doing your processes as a trader to be able to until they're kind of almost like automatic response. In the same way, a soldier can strip a rifle in the dark, the same way nurses and doctors can put like needles into you in accident emergency, the same way a Formula One driver can operate a fast car. So also the same way a trader needs to be able to operate. They need to have that process, the discipline to follow it, and then be able to sort of, do it comfortably in pressured environments.
So from the Air Force to trading, that's quite a career pivot, sir. But how did that transition even happen? What was the reason behind that?
So I said I kind of only had a short-term contract with the Air Force, and if I decided they wanted me to stay, but the contract would have been 14 years, which was a long contract, but I wanted to go back to my flying job, and they kind of said, no, you're going to stay on the ground, you're going to be sat behind a desk, because that's how you get promoted quicker. But that wasn't what I wanted for myself. So I was kind of, if I'm going to leave, I'm going to leave now. And then, as I said, there was an advert, banks looking to take controllers from the Air Force to try them out as banks. Now, what actually happened is those banks, they went down to Heathrow Airport and they sat with the air traffic controllers at Heathrow Airport, and it actually didn't work very well, because what they found, which I could have told them, is air traffic controllers are immensely risk averse. Right, their job is to keep aircraft apart from each other, and that's what you want. That's what you want for your air traffic controller. You want them to be risk averse. But my job as a fighter controller, the battle manager, was to bring aircraft together, as in the fighters and the targets, and employ the weapons whilst keeping them safe from everybody else. So you have to have that kind of, you have to be comfortable with risk. As I said, you have to understand the risk spectrum and understand where you sit in it, and understand what is comfortable for you and what is not, and have those risk elements. And so that kind of intrigued me. And so, I ended up, as I said, I kind of transitioned across to actually a job, as I said, in the kind of, for a couple of years in a dotcom in the kind of in the city. And I would spend time on trading floors. And if I'm honest, I was a bit underwhelmed by what I saw on the trading floor. Was very similar to an Air Force ops room. There were some exceptionally good people, but an awful lot of people weren't that good. And I just thought to myself, right, if you can't join them, beat them. And that kind of started my journey. And then, as I said, I started trading during .com, and then basically that gave me the kind of the sort of the interest, the passion for it. And then I just over years learned myself better until I got picked up to work for education firms, and then I got picked up to work for funds. So it was a long journey, but it was a good one. It was a good one.
May I ask you, sir, are you a naturally risk-taking type? I mean, the Royal Air Force and trading, both pretty extreme, just in different ways.
That's a good question. That's a good question because it's one I kind of reflected on a fair bit. So if you were to ask my friends, all right, from friends from school, friends from the Air Force, friends from the city, friends from trading, friends from sports teams, I think it all comes to perspective. If you asked all of those, they would say, "Oh, Paul is a risk taker. Paul is comfortable with risk. He embraces risks. He's, he likes swimming with great white sharks and doing the Pamplo and bull run and flying jets and driving cars and stuff and what have you." So they would say I'm very much a risk taker. But now that I look back on my life, I don't think I've taken enough risk. I think that actually I've played life far too safe. I have not taken enough calculated risk. So it's all about perspective, isn't it? As I said, most people would say that I'm a natural risk taker, and I'm comfortable with it, and I like doing things that terrify me. But interestingly, I think I probably haven't taken enough risk. I personally think I've played life too safe.
That's actually deep, sir. So you worked in the city during the legendary .com boom, a historic place and historic moment. Did you realize you were living through history at the time? And what did it feel like from the inside? What was the atmosphere like? Maybe, I don't know, maybe some particular day that still feels vivid in your memory?
Yeah. I knew that, I was a young man then. I knew that there was, would I say legendary? I would say we knew there was a change going on. The internet economy was breaking out. All right. And as I said, I worked in kind of in a .com company, and to start with, and I was right, as I said, I was in the right place at the right time, and you were around other companies, and you could tell there was a real energy and there's a real excitement. And as I said, everybody swallowed Cisco's pill that the internet economy was the way forward, etc. And so what would happen is that my job would be to go around other companies, whether it be like trading companies or whether basically small .com companies, looking at how they operate and affected. And so as I got to see these companies, I got to say, well, actually, this company's great. I'm going to buy some shares in these companies. It was just like in those days, it was still old, like kind of phone dealing, buy £500 worth of shares, get a little share certificate, and off it goes. But what I did notice was that it was like literally everybody was involved in it. Now, and actually there was a particular day. There was a particular day that I remember vividly, and that I was at my desk. I was at my desk doing my job, and then I used to sit. This is terrible. I can't remember the girl's name, but she was the secretary to the marketing director of the company, and she leant across and said, I know everybody knows you're involved in trade and investing, Paul, or you're doing this. She said, my boyfriend was in a pub in the city last night and overheard some people talking about this great new company, AMS, Advanced Medical Solutions, and I thought you'd like that. You'd want to trade that. And I remember just sitting there, and actually I got the fear. I was like, this is madness. This is absolute utter madness. I'm getting tips from what the girl next to me, her boyfriend overheard in a pub. I'm like, this is madness. And I got the fear. And what I did was I closed all of my positions. I closed all of my positions because I got the fear. And it was about February, it's kind of let off of February 2000. And the market kept going up for about a couple of weeks. And I thought, Paul, you're an idiot. You've made a mistake. I went up for another couple of weeks, and then it just absolutely, it just collapsed. Kind of like February, March 2000 and stuff. It just absolutely, utterly collapsed. It just absolutely fell off a cliff. So, I got out near the peak, but once again, as I said earlier, I was just lucky. I was just lucky. I don't look at that time as me being some great trading guru. I was just lucky, right? And that helped me to admit that it was just luck, because if not, and I see it a lot in traders, is they get a bit of success and they start thinking, they're a legend in their own lunchtime. They start thinking they're amazing, and they're not. You were just lucky. So yeah, so it was quite something. It was quite. It was quite a period. But would I say I knew? I think the first one you live through, you're just riding it. You don't know what you don't know. Now, of course, days with what's going on in even today as we speak, you're much older, you're much wiser. You've lived through a few of them. But the first one, you're just riding the tail. And as I said, I was a lucky punter. That's the way I look at myself from that particular chapter. But it started me. It got me started. And that's, I'm grateful for that.
Wish someone had been there during your toughest trading moments. Your wish has been granted. Book a one-on-one session with our mentor and ask anything you've always wanted to know. Which strategy fits your style best? How to handle a tricky market phase? What blind spots might be holding you back? A single honest chat with a professional might be all you need. So book your session right now. Do you think it's possible to spot those historic moments while they're happening? I mean, what are the signs that traders should look for? Or maybe you can see such signs right now in some markets.
Yeah. So of course, here's a great example. Last Friday, of course, we had a real collapse in markets and crypto. And but the thing is, interestingly, earlier in that week, I found out my mother had opened like a crypto trading account, and because one of my other brothers was a brother and a uncle, cousins and stuff, and I was just like, I'm older and wise. I'm like, do you know what? When 76-year-old grannies are opening crypto accounts, that's the sign of a top. All right, that is a top. Yeah, that's the sign of a top. And I said it to my partner. I said, you know what, this won't end well, and stuff. And thankfully, she's all right. But yeah, when you're seeing elements of those things, right? When people are being drawn in to markets because of the kind of FOMO, everybody's got a bit of FOMO. Everybody, that draws people in and stuff. And I think that is, as an experienced operator now, I can see those examples. I can see that experience. I can see that kind of human psychology of it. And my natural inclination is to fade human psychology in those moments.
All right. So when the dotcom bubble finally burst, what was the crash like from inside the city? What did those days feel like emotionally?
Yeah. Interestingly, and this is where I made a mistake. This is so. It was pretty brutal. I worked in a a dot-com company, and we went. So, for example, we went from 26 staff. That team I worked in, we went from 26 to 6. And I had actually asked for voluntary redundancy. I said, "Do you know what, boss? I'm going to go off and be a full-time trader. You just make me redundant. Give me that check, and I'll happily go. I'm a single guy, didn't have any mortgage, wife, kids, nothing. And he was like, "No, it doesn't work like that." And so it was brutal. All right, it was brutal. Those, not only just the companies, banks, but also a lot of those dot-com companies, but then also the ecosystem around this. People forget, the things like legal companies, accountancy companies, infrastructure companies, IT companies. It had a huge ripple-on effect. If I had been smart, and going back to sort of having a word with yourself, your younger self, what I saw in London was that, of course, the shares dropped, but then also London property prices came off as well. And I thought, well, do you know what? We might see London property prices decline more because all these people who I saw who were all earning 6-figure salaries in the city are now out of work. So, they are not buying houses. They are probably selling their houses. So actually we'll see a decline, and that will then be the time to buy my own place in London. And I was wrong, because actually what happened was everybody took their money out of the stock market and put it into the property market because they thought it was safe. And so actually, even though the share prices dropped, the property in London, it dropped a little bit, and then it basically took off. And some might say it's even with the GFC, it's never really looked back. So yeah, there's always second and third order consequences and stuff. And so, yeah, if I'd been talking to my younger self, I would have said now is your time to buy more property in London, Paul. But woulda, coulda, shoulda. Hey, it's always easy in hindsight.
It seems like that kind of crash must have been one of those lessons that you can only learn the hard way. But these days, the market feels like a mini dot-com crash every other week, to be honest. So maybe any survival tips from Paul Wallace, the original dot-com crash survivor, on how traders can handle drawdowns and market shocks?
So if you're going to use leverage and volatility are double-edged swords. Okay, when you're on the right side of them, they can make for your trading to be great sessions. When you're on the wrong side of them, they'll make for challenging environments. You have to, it comes back to this first thing that, you are a professional risk manager first and foremost. You're not a trader, you're not a speculator, you are a professional risk manager. And if you are not a professional risk manager, you will end up as roadkill. So I can understand that there are lots of people who might basically be using too much leverage or have too many positions or overexposed. You are asking for trouble that way. You are asking for that trouble. So if you're going to be involved in those kind of environments, you need to understand that flash crash, drawdowns, mini crashes, they're going to be the norm. They are going to be part of your experience. And I go back to that early point: is you need to know where you sit on the risk spectrum. If you are not comfortable riding out of those elements, well, then you shouldn't be in those kind of trading styles. All right. But equally on the other side, you can't just buy and hold and hope that everything will work out best for you. You do need to have an element of active engagement in understanding what your own risk profile is, and have principles in place in terms of, well, if there's a certain amount of drawdown, I just cut my losses. Okay, if I have, if there is a dip and there is an opportunity for me to buy, and it meets my rules, well, then I have to do my job as a trader and step in. So you manage risk, have a process that you can follow, make sure you manage yourself. All right, in terms of, I've seen and coached lots of traders. There's some traders, they lose all sense of perspective. Okay, and that doesn't help them, because then when you do, that is when you tend to make sort of knee-jerk, impulsive decisions, which rarely work out well. Okay, if you're starting to feel a bit nervous, if you're starting to feel a bit, take a bit of time away from your screens, go for a walk around the block, okay, go and have a bit of deep breathing and fresh air, and get a bit of distance, and then formulate a plan, and then come back to do that, okay? Just sat in front of your screen mashing keys during a crash rarely ends well, all right? Rarely ends well. So, yeah, it keeps coming back. You're a professional risk manager first. You have to be. It's as simple as that.
So, for someone who's just starting out, what are the things a new trader can and must actually learn and prepare for? And what are the things only experience will ever teach?
So kind of like a new trader is very outcome driven. Okay. So their outcome of their trades, right? They want the winning trades. They want to hit the equivalent of a home run, however you wish to label it. They're outcome driven. Okay. Which is great when it works. But as I said earlier, it won't, and it's actually how you respond when markets do what they're going to do, because they will. A professional, instead of focusing on the outcome, professionals are focused on the process. They're focused on the mechanics. They have a simple process that they can follow, a simple plan. I've been fortunate to have experience of being, working on kind of, battlefields, sport fields, boardrooms, trading floors, right, and winning across all of them. And what I've learned is that a simple plan executed well, 80% of the time will take you to where you need to be. Lots of new traders, they don't manage risk very well. They have overly complex plans, which either A, they can't enact, they can't execute, or when they come under pressure because markets are moving fast, there's things happening, the plan and their ability to execute it just crumbles and falls away. Manage risk, plan your trade your plan. Those are the three things that you can control, all right? Plan your trade your plan, manage your risk. Once your trade is triggered, anything can happen, okay? But those are the three things that you should be working on. Plan your trade your plan, manage your risk, the things that are within your control. And that's the process, which is what professionals will focus on rather than the outcome of the trade, because you could have the most beautiful trade in the world. It could be the most beautiful setup, absolute cracking, beautiful setup. Looks like it's going to be a fantastic trade. And then, markets just completely reverse and do the opposite. Welcome to trading. That's the world we live in. That's where you need to manage risk.
You, sir, started off in the pre-smartphone, pre-Twitter era. You actually had to call for information. So was trading easier or actually harder without all the digital noise that we have today?
I'm going to sit on the fence a little bit and say it is a little bit of both. In one way, you didn't have access to all the information, all right, that you needed at the start, okay, and you have to go and find that, all right. So that kind of made, in terms of the access to information, you struggled. Whereas nowadays, I would suggest there's too much, and that kind of leads to analysis paralysis for people, because it's just overwhelmed by so much data, and so much data that basically can basically counter each bit of the narrative. Sometimes a little bit of ignorance isn't a bad thing, because it just allows you to focus on what you can do with what the resources you have in front of you. What I will say is that I don't trade off my phone. All right, don't trade off my phone. Never trade off my phone. That's not how professionals doing it. Now, I appreciate I'm a bit of a dinosaur. All right, I'm the first to admit I'm an old man. I'm a dinosaur. Okay, and these days people are more comfortable doing that. My view is it's about kind of the kind of standards and expectations I have upon myself as being as a professional, like operator and fund manager. As in, when I sit down to trade, I'm sat at my screen, I'm sat there, and I'm operating as a professional. I've seen too many times as a young lad in London, fellas trying to trade on their phones, trying to chat up young girls and try to show off to young girls while they're putting on a long footsie position and stuff after a few drinks and what have you. And that's just each their own. That's just not my way of operating. So yeah, you have access to fantastic. fantastic education, on YouTube and other places and websites and stuff. But equally, you can have a bit too much. All right, I think you can have a bit too much, and it makes it hard for people to know, well, what is actually useful info, and what is just chaff. Yeah. So, I wish, we talked about earlier about going back. I wish if I could go back to being a young 20-odd-year-old guy with this knowledge and experience, I'd love that. I would love that. I would. Yeah, absolutely. Yeah. But anyway, woulda, coulda, shoulda. But yeah, I think it's maybe a bit too much information these days.
All right. Would you say that surviving that boom cycle made you more immune to hype cycles? Do you see the same crowd psychology today in crypto and meme stocks that you saw during the, dot-com boom?
Yeah, totally. And this kind of probably links into that kind of question about previous question about technology, and that the technology that's available to people these days is fantastic. It's astounding. But I think it sometimes gives people a kind of a false sense of superiority or ability, and I think that can sometimes kind of that sometimes counters against people. People think the technology is there to provide a shortcut, and that's great, and it can help you and it can assist you. But as a trader, you still have to do the hard yards yourself. You still have to do the hard yards. So there's two things to that. I have a plugin for my swing trading. I have a plugin that does most of the analysis for me, but I actually still do it myself. I still do it a couple hours on a Saturday morning. I sit down and do it and go through the charts myself. And the reason I do it is because whenever I do it, it embodies the best practice of me as a trader. I get the best analysis and I get the best connection to the market when I do the work myself. And then what I actually do is I use my plugin. I use the tech to sort of sanity check to make sure I haven't missed anything. That's the way I operate. Now, I appreciate others will do differently, but I just found that when I do the work myself, that's when I tend to make better choices, better decisions. I operate better because I'm a human being. One of my weaknesses, like most other human beings, is I can get complacent. The tech, I think, allows people to get complacent, and actually that's not necessarily a good thing. And people want that. People that want the tech, the work, that, as I said, it gives them a kind of a false sense of security. But ultimately, fear, greed, and hope, they still run markets, right? Whether how you're trading or what you're trading, fear, greed, and hope still run markets. And understanding that in yourself and understanding that in the crowd, that can be one of your edges as a trader. Certainly one of mine, I think.
Even with all the tech, with all the data, it feels like human behavior never really changes. But which human patterns do you still see repeating no matter the era?
Yeah, totally. So, well, there's that element of FOMO, isn't it? There's that element of FOMO of, what we have seen some great trends. All right, we have seen some great trends in in these last 6 weeks or so, since things like gold, silver, other instruments, etc. And what I do tell new traders is good trends don't happen as often as you like. All right, they probably only happen 25% of the time. Most of the time, markets are either transitioning, they're range bound, or chopping. So when there is a good trend, don't fight it. You want to find a way to ride it. Okay, but what you quite often find is, once you start to see a particular chart, once it starts going parabolic, once it starts going vertical, I tell people, if you're in it, ride it. If you're not in it, stay on the sidelines. Do not get caught up in the FOMO of basically chasing a market that's going vertical, because for most retail traders, they are basically going to be buying the top, and the person who's going to be selling to them is probably me, who's waiting to basically fade the greed. That's what I'm looking to fade the greed from people like that and how they operate. So so fear, greed, and hope is still there in markets. You can still see it in charts in the way that they operate, and that kind of FOMO feeling. And as I said, one of my ways of operating is kind of is fading the other, taking the other side of that.
All right, sir, let's choose only one. If you could send one short message back to the beginner Paul of the 90s, what would it say?
Take more risk. Take more calculated risk. That's what I'd say. Take more calculated risk. Go for it. All right? Go for it. Yeah, take more calculated risk. That would be it.
You, sir, have coached thousands of traders over the years and founded trading beliefs to help them develop the right mindset and skills. This is actually what we're also trying to do in the Sabi Academy. So what core belief about trading performance sits at the heart of your approach? I mean, that one idea you wish every trader understood.
I have never met or traded alongside or worked or coached or mentored any single trader, any good, successful trader who does not keep their own data. You might get lucky for a while. Every good trader, okay, I've seen, I've coached, I've learned, I've operated. They're on top of their data, as in they keep great records of their trades, they keep the data of their trade, and they review their trading on a daily, weekly, monthly, quarterly business. If you do that, that doesn't guarantee success, but I will guarantee not doing it will guarantee failure as a trader. So if there's one thing I'd say, keep good records and review them.
So it's basically journaling, right?
Yeah. So I would look at that as basically you want to keep a spreadsheet of the actual data of your trades. You want to journal your trades, actually, what happened in that trade, how you felt. You want to keep an equity curve. And I also grade my trades on performance, execution, and confidence as well.
Mm-hmm. All right. Imagine a whole class of students handing you their trading journals. What's the first thing you look for that tells you whether they'll make it or not?
Well, if those journals are complete and accurate, that's the first thing. All right, that's the first thing. Many people don't want to do it. Many people, because they say, "Oh, it's a bit boring, Paul. It's dull. Doing the data, doing the write-up, it's dull. It's boring. I don't want to do it. No, I just want to trade." But actually, that data is your own personal gold mine. All right, that data is your own personal gold mine, and by mining that data, that is where you're going to see your next opportunity, your next evolution as a trader. So, keeping the data and keeping it accurate, and doing it willingly, even if you don't like it, that's a first good step, first great step, I'd say.
All right, but have you ever coached someone who you initially thought wouldn't make it, and then they surprised you? What changed in them?
Good question. Yeah, I've a few people who I kind of call it like turning the super tanker, as in, it might not happen overnight, it might be slow, but at least they're going in the right direction. So yeah, there have been a few people, and most of them, there has been a realization that you are either an amateur with a hobby, or you are a professional with a business, and you get to choose that. That's about attitude. We all have hobbies. You would all expect to spend money on a hobby, but I would expect to make money from a business, which means you have to be professional in everything you do. And so, yeah, you're either an amateur with a hobby or a professional with a business. And the people who have turned their super tanker, it's because they've decided to step up and move from being an amateur with a hobby to being a professional with a business.
You sometimes talk about this behavioral edge. What does that actually look like in practice? Can you give us a specific example?
Okay, so edge in itself is a fascinating subject, and I would say traders need to realize there are different forms of edge. So you might have statistical edge, where you understand the math, you've done the back testing, your math plays out. which private traders can have. They can do. That's an edge they can have. You can have an informational edge. So, maybe you have an ability to process patterns quicker. Private traders maybe, are going to get beaten by institutions, or you have insider information, black edge, right, which is what you don't want to be operating in anyway. Then you might have execution edge, which means you can execute quickly and effectively and without slippage. And private traders would struggle. But then the final one is kind of like a psychological edge, a behavioral edge, and so that is about managing yourself, managing your mindset, managing your ability to be resilient, to operate in uncertainty, to be resilient, as in realize that a losing trade, it says nothing about your value as a human being. Sometimes new traders, they attach their self-worth to the P&L of their trading account. So when the trading account's up, they're up. When the trading account's down, they're down. And so they're on an emotional roller coaster. And that's no way to live your life. All right. So behavioral edge is partly about understanding fear, greed, and hope in yourself, and understanding also when you see it in the market. It's that old Buffett saying, you want to be greedy when others are fearful, and fearful when others are greedy, but you can't be if you don't understand fear, greed, and hope within yourself and within the market itself.
If you didn't buy Bitcoin in 2010, prop trading might just be your next big chance. At Sabio Trade, you can get funding from $20,000 up to $650,000 and even trade with leverage to go even further. All you need to do is pass one-step assessment. No pressure, just take your time. Once you pass, you'll trade our money while we take all the risk. Choose your plan and start your assessment today. The link is in the description. Everyone says control your emotions, which is obviously easier said than done, right? But you've been working on that topic for decades. So would you please tell me, how do you actually make emotions irrelevant in trading? What exactly works for you? I don't know, maybe suppression, awareness, some specific habits, meditation, or something else, I don't know.
Yeah. I kind of firstly, my view would be you can't make emotions irrelevant. We're human beings. We're just a big bag of chemicals, all right? So people like to think that you can just ignore emotions, or that you're ice cold, blood in your veins. I personally, I don't buy to them. There might be some, but I don't buy to that. Part of it is about understanding your emotions and calibrating your emotions and recognizing that you are not your emotions. It is perfectly feasible as a human being for you to experience fear, to experience greed, to experience hope, to experience euphoria, to experience despair. But they are fleeting. I see them as like fleeting emotions. I am not my emotions. You can still have fear, but still operate. You can calibrate and use it as a tool to help you, to guide you, as opposed to being a slave to. I think sometimes people are they're slaves to their emotions, and that doesn't help. But part of it is about learning and understanding and recognizing those emotions within yourself, so you have an ability to be calibrated and the ability to sort of recognize, have the self-awareness to realize, well, actually, do you know what? The market's doing X, Y, Z. I'm feeling A, B, C. Well, actually, I understand why that is. It's just data. It's just data that's coming off the screen to me. How I'm interpreting it depends upon my experiences, my ability to manage emotions. It is just part of the process of engaging with markets, and using it as a tool to make myself a better trader. That takes time. All right, that there is no kind of overnight sort of no kind of magic beans that anybody can sell you, or a fancy magic medical lotion that you can cover that's going to allow you to do that. But I think trying to suppress emotions, I don't think that is a long-term successful tactic for myself. That would be my personal opinion. It's more about understanding where is it coming from, what's it happening, and I've often said that I think for men, it's not for me to speak for females. They can speak for themselves much better than me. But for men who, a lot of them I see and coach being one, trading live markets will be the best, short of physical war, will be the best personal development course that they ever choose to do, because you are forced to confront the good, the bad, and the ugly of who you are. And you have to confront it, because if you don't, you'll keep repeating the same behaviors, the same mistakes, etc. So, you have to, here's the good, the bad, and the ugly. And you have to, all of us have it. We're human. So it's not about suppressing. For me, it's not about suppressing. It's about understanding and recognizing where it's coming from and what it's really telling me. What it's, is it helping me or is it hindering me in that specific moment?
So, following our I Wish I Knew theme, I personally believe that new traders often over romanticize trading. The freedom, the success, the lifestyle. For beginners, that might sound like a huge bummer. Like, if that's all a myth, why even bother? But what's the real reward that makes it worth the grind, in your opinion? Maybe something less glamorous, but ultimately more fulfilling.
Yeah. I can talk about this on kind of from a number of different levels, namely that, it's part of my own experience. There's lots of people attracted, lots of young men are attracted to trading because they see it as an opportunity to basically to achieve financial gain, raise their status, as a man. Okay. And what they find is actually after a couple of years is that, that hasn't occurred for most of them for various reasons, good and bad and stuff. The thing I found myself, and the thing I find speaking to lots of traders who've maybe been trading for, let's say, more than 3 years, 3 to 10 years, is that interestingly, they're not always, they've come to a point where they're not really driven by, let's say, the financial edge of it. If anything, when you start digging deeper into understanding the true intrinsic drivers, the word that keeps coming up is autonomy. The kind of the ability to live life on, by your own rules, on your own terms. And that becomes unbelievably attractive to me. It certainly became attractive to myself. And actually, what you realize if you structure and do it properly, that you can, that actually doesn't take as much time and as much money as you think or are led to believe. Not everybody wants fast cars and speedboats. Okay, success is a very, very personal thing in that, and so autonomy is a real driver. And so I know from personal experience. So kind of many years ago, my father was very, very sick, and at that particular time, he had been given like 6 months to live. All right, and I was living in a different country, and trading gave me the ability to basically. I came home and spent some time with my parents. Okay, came home, spent some time, helped them out, and I was able to do that while still operating, still trading in a different way. Okay, but I was able to do it on my terms. So to me, that was an immensely beneficial. Okay, it was a beneficial byproduct of trading. It's not why I went into trading, but it was a great for me to be able to do that. And I think maybe it's part of getting older. Is that you realize that autonomy, that ability to do that, to spend the time with the people who are important to you, to do the things that are important to you. That's a wonderful thing. All right, that is a wonderful thing.
Do you see trading as a spiritual practice in any way? Maybe, a mirror for ego, patience, surrender?
Yeah, totally. I would say it's definitely very much a spiritual practice. Very much. Yes, I said, it's the best personal development journey most men will go on. And part of that is about embracing the good, the bad, and the ugly within you. And that does have a spiritual side. Okay. And I think people can define that spiritual side how they want. Some people might think it's kind of organized religion. Other people might think it's the opposite end. It's very kind of out there, hippie, woo woo. How you wish to label it or define it, that's fine, that's yours. But it is most definitely a spiritual experience. So certainly I have found it, okay, and it has taken me to places spiritually that that I might have been surprised by. My younger self would have been most definitely surprised by. But it is definitely, most definitely a spiritual experience.
You've seen retail, institutional, and now prop environments. But what did each environment teach you that the others two couldn't?
In terms of retail and institutional traders, the thing I'd say about them is they both think the grass is greener on the other side. So private retail traders think, oh, do you know what? It must be great to be an institutional trader. You're getting paid a salary, your IT is taken care of, you get your office paid for, you get to be with other traders. It's fantastic. It must be amazing. Whereas if you speak to institutional traders, they're saying, do you know what? It must be great to be a private trader. You get to work your own time, your own hours, your own energy. You get to keep all your profits. You don't have to play any of that corporate nonsense. They both think that the other side is the grass is greener, when in fact actually it's about cutting your own grass. With the prop environment, I think is a fantastic opportunity for private traders, because the harsh truth is most private traders are undercapitalized for their particular goals and objectives, and so prop environment gives them an opportunity to access funding that they would have either had to generate elsewhere, or like me, work your way towards working for a fund, etc. So all three environments have their benefits, and they all have their pros and their cons. And I think it's mostly about kind of leveraging the strengths and mitigating the weaknesses of that, finding ways to mitigate the kind of, let's say, the structural weakness of those particular environments. So for retail and prop traders, it's a case of basically making sure that I know I keep banging on, but that you are managing risk, that you are not over trading in terms of quantity, in terms of size, that actually you operate to a plan that allows you to mitigate your strengths, which is basically your ability to be agile, your ability to be adaptable, your ability to trade as and when you want and should. And I think, good private and prop traders, they sit down and plan that. They plan that well.
How do you see the prop trading boom changing the psychology of new traders?
The way I see it changes that. So me and a couple of my trading buddies, we talk about a kind of hypothetical prop trader who we have called. We've given him the name YOLO Reset, because what we see is that some of those traders aren't managing risk. They're because they're quite happy just to blow an account and just start another prop account prop challenge. Once again, maybe it's me being a bit of an old dinosaur, but I've come from a background where your capital is like your ammunition. If you're out of ammunition, you're out of the fight. So you should be protecting your capital, like it's oxygen, all right? Which I know, banging on risk management, but you need to do that. And whereas actually I see quite a few people who have maybe just come to trading recently and coming straight into the prop world, they sort of treat their prop funds as kind of almost like transactional. They kind of like throw them away. Whereas, that's not my experience. Capital is your ammunition, and if you're out of ammunition, you're out of the fight. Simple as that.
All right, let's fantasize a little. Where do you think the future of trading really belongs? I know independent traders, big institutions, prop firms. Let's say if you were 25 today, starting fresh, what path would you take to reach professional level fastest?
I would. I'd kind of zigzag a bit in terms of. I would start, just as a normal private trader, trading on your own account to learn. You need to learn your skill set. You need to learn your craft. learn your craft, okay, learn how your platform works, learn how to basically to understand markets, to basically to choose your method, to manage money, manage yourself, okay. And then once you've done that and shown you can do that, well, then basically then you have the opportunity to test that, or to build that from by engaging with prop accounts, okay, and opening yourself up to the accessing of that prop funding. That prop funding then, for many people, that if you do it properly, that might allow you to basically not even need to go the institutional route. As I said, be careful what you wish for. For many people, they can do well enough, especially with the technology these days, that actually they can generate enough of a return off good sized prop accounts that allow them to basically to live the life they particularly wish to. There will be some people, though, who will want to then basically perhaps jump across the institutional because they'll have demonstrated track record. They'll have demonstrated track record with their own money. They'll have demonstrated track record with a prop firm's money, and then doors will open for you. I try to tell traders going that route is that if you're a good trader, trade well, manage risk, and run it like a business, doors will open to you. All right, doors will open to you because there are always institutions of one form or another that are looking for homes for their capital. And so if that is the route you want to go down, it is available so long as you, as I said, so long as you're operating as a professional with a business. So I'd start, but be prepared to zigzag based upon, on your progress.
And here's a bit of a personal question, if I may. What's your guilty pleasure after a big trading week?
I think if you'd asked me this 20 years ago, the answer would be very different. As a young single fella living in London, it would be very different. Now, I have been very fortunate in my life, all right, to have, flown fast jets and driven fast cars and swim with sharks and run with bulls, all that kind of, I've done that. So now at the end of the weekend, actually, I enjoy a bit of peace and quiet. Okay, I enjoy a bit of peace and quiet. My end of a good week. So it's Friday now and stuff. So my partner, she'll want to work, and so actually, I'm very fortunate. I live in a very beautiful part of the world and the coastline in Cheshire. So actually, it's not as exciting. We'll go for a bit of a walk this evening along the coastline. Go and stop in one of our favourite bars or restaurant, have a drink, a bit of bite to eat, and then walk home. It's it's very chilled. A chilled weekend is a good weekend. All right, that's and I'm very happy with that. I'm very happy with that.
Sounds beautiful, sir.
Yeah, that's the stage of my life.
If trading disappeared tomorrow, what would you do that still feeds the same part of you?
That's a good question. As I said earlier, I've been very lucky to operate and to win on, battlefields, sports fields, boardroom, trading floors. I like winning. All right. I like winning, and I like helping people win. And so I think helping people win, find their way to win, that would be, that's what would drive me. All right. Helping people find their own decisive edge, whether that be on the sports field or the boardroom or the battlefield, etc. That is what, if trading wasn't there, that's the route I'd go. I like winning.
All right. And the final question is here. What's a book, film, or quote that stayed with you through all your trading years?
We could do a podcast just on great quotes. The one I do is right. Okay, going back to the 90s. I have it actually on my Twitter page. It's on my my photo on my Twitter page. So there is a movie from the mid-90s called Heat, which is Robert De Niro, Al Pacino, and there's a quote from there where they're about deciding to do a bank job and whether they should take the risk. And the late great Tom Sizemore comes out with a line. Well, for me, the action is the juice, and that line has always stayed with me. It's why I love trading. I love being in front of markets. I love engaging in markets. I love, I don't, as I said, I've never thought of quitting. I never wanted to retire or anything like that, because for me, the action is the juice. That's it.
What about the action? What about the juice? We have covered the theory and the stories, but our audience loves seeing how it all works in real life. Could you please walk us through a couple of trades how you read the market, how you plan an entry, and what's going through your head in real time.
Yeah, sure. Happy to do that. Is this a good time for me to show a couple of trades? I can show a slide. Would that help, or would that
Yes,
be
please.
good? Fabulous. All right. So here's an example. So when you asked me, I thought, right, this couple of trades from early in this week. So as a swing trader, when I operate as a swing trader, position trader, I'm very much a trend following trader. As an intraday trader, I'm very much about reversal and mean reversion. My view is that the majority of the time on an intraday basis, markets generally tend to close about where they open most of the time. But within the day, there are lots of swings, and I can take a piece of those swings as part of my trade. So I like to see price push out and then come back in, and that's what I'm looking for. So this is an example of this is gold 30-minute chart. So I, as an intraday trader, I do quite a bit of work on the 30-minute chart to give me context, to give me understanding. Let me see if I can draw on here to help. So, listen, the bias is clearly it's an uptrend. Okay. And I'm above the kind of 20 period moving average, the 50, 200. And where I'm interested in is that basically I know the kind of the long-term trend, both on a daily is strong and long for gold, but equally also these boxes, the kind of the overnight Asian session, and price basically falls down here, which is the kind of 50 period moving average. Let me clear that up. And it's already starting to look like this is being rejected here, okay, at that 50 period moving average. So I'm looking, when price pops out of the Asian range, I'm looking to trade back in to the Asian range. So that's the kind of context. But then when I go down, so hopefully you can see that next chart, which is kind of the 5-minute chart gold. So I kind of just use very simple, double tops and double bottoms being kind of one of the tactics I will use once I see price pop out. I want to see it come back in. And on this particular case here, this was kind of after the Asian session, price had popped out. It put in a nice double bottom there. And then basically I was kind of long trading it up to I like to trade it back into the middle of the range or the 50 period moving average. That's kind of, very simple. Pop out, show me a reversal picture, a reversal pattern there. I like to see in like a double bottom or double top, the second leg, 0.3, if that is also a reversal pattern of its own self. So in this case, that's kind of a bullish pin bar. It's a morning star formation. That gives me more confidence that we're getting a double bottom here outside of the range, and I'm happy to just trade it back to trade like kind of mean reversion back into the middle of the range. And I'm happier on this as well because I know on the 30-minute chart and above, the gold trend is up. So this is just kind of a pullback in an uptrend, and I'm happy to sort of to take that. So does that help give you a little bit of insight?
Yeah, that's great. But may I ask you, how do you decide not to trade? What's a deal breaker signal for you?
So the majority of my intraday trading, okay, is still mostly on sterling. That's where I started out. That's what I do, and I don't generally trade sterling till after 8 o'clock in the morning. But I'm at my desk for 6:30, and the first half an hour of that is putting myself in the right place before I even look at taking trades. One of the things I do is I have a psychological fitness test that I have to go through every morning before I even look at charts, before I even switch on the computer screens. I've got a kind of a pre-market routine checklist that I follow through to make sure that I am in the right place. And part of that is, as I said, a psychological fitness test based on what my sleep has been like, what my attitude has been like, whether I've exercised, whether I've meditated, what my diet was like, whether I've been outside. And I have to do that before I'm even allowed to switch my screens on. And if those scores are poor because maybe I've just had a bad night's sleep, or a late night, a bad night's sleep, well then I remove my trading privileges for that particular session, or I have to go and do something that puts me back in the right place mentally to be able to operate, because trading is a performance activity. It's not a case of just turn up, like a normal job. You have to perform, and so if you've got to perform, you need to be in your best place to perform. And if you're not, you owe it to yourself not to trade, because there's nothing worse than feeling scrappy and crappy. You're not up to it. You trade really badly. The trade loses. And in the debrief, you shouldn't have traded because you just weren't in the right place to do it. That's a terrible feeling. You owe it to yourself to do what you need to do beforehand to put yourself in the right place, so that you give yourself the best space to make good trading decisions. Does that help? Does that?
Yeah, that was great, sir. So seems like that's it, sir. That was a truly useful conversation full of insights and thought-provoking facts. We'd like to thank you for your time and for your wisdom. I'm sure our viewers were pleased and sometimes even excited with what they saw and what they heard tonight. So thank you, sir, and goodbye.
My pleasure. Thanks very much. I hope people found it useful. And as always, I wished everyone the best of success in their trading endeavors. Thanks very much.
Great. Thank you, sir. Have a great night. Goodbye.
Fabulous.
PropChat. Ultimate insights of trading with Sabio.
So that's it for today. If you got value from this episode, make sure to subscribe, hit like, and share it with your friends. You can find Paul's work at tradingbeliefs.com and follow him on social media. All the links are in the description below. And by the way, it's a great day for trading. Just think about it. See you very soon.